best to try to find the best possible way to separate non-tariff inflation from tariff inflation.
Let's unpack this now with Nadia Al-Balasi, Senior Market Analyst at Equiti Group. Nadia, thanks for being with us. Now, what do you make of Chairman Powell's comments, and how will the Fed's move impact the broader market?
Now, good morning, Taiba. We saw that the Fed yesterday projected a few things. They projected that the tariffs will indeed affect inflation in a negative way, that a lot of core PCE inflation will indeed rise, that growth, the GDP will decrease. The projections have been decreased from 2.7 to 1.7. So that's going to hurt the economic growth of the US, and that's very normal to see while tariffs are happening. The effect on global markets is that obviously when he said that there are going to be 2 rate cuts this year, that's more than one already anticipated since the beginning of the year. That's definitely going to be a relief to the markets. We already saw a rally that's also going to boost gold prices even further. We already saw that gold prices have gained $70 just within 1 week, and that's aside from geopolitical tensions, but they're also going to rally from the rate cut expectations. So that's the effect on the broader market. But economic growth is indeed going to be shattered, and inflation, core PCE and CPI are going to rise.
And as you mentioned, the Fed signaled 2 rate cuts this year. How soon can we expect to see these reductions?
I believe we could see one by mid-year, and that we could see one by end of year, but it's definitely going to be data dependent and depend on the PCE numbers and the CPI numbers. I guess they're not going to be able to do a rate cut as long as they see a jump or a bump in inflation numbers. So as long as there's this upward trajectory of inflation numbers, maybe that when we see a little bit of a slowdown in inflation numbers, then the Fed can then intervene and actually mark down or do a rate cut. This is the only door or the only gap that they have to actually go in the market and do a rate cut.
Right, and has this calmed concerns over tariffs?
I don't think so, because we're going to be hit with more tariffs in April. I think that the key headline for markets this year has been more tariffs, and it's definitely going to be hurting economic growth. I don't think it has hurt. It's cooling anything of the market sell-off. Quite opposite, actually. I think it's actually sparking more market sell-offs. We already saw last week a 10% correction in global equities. So I think this could even spark another correction in global equities, and markets have been on edge ever since the tariff saga has started.
All right, Nadia Al-Balasi, we will have to leave it there. Thank you very much for being with us.
Thank you very much.